So, and I should say too, I should have. I know I didn't really give Mark a big introduction because I don't feel he really needs one. To be honest with you, most of you already know who he is. But Mark has had incredible performance. There's years where he has beat the pants off of me. So he's really done quite well. And last year he was up 300 and some odd percent. And we're not talking on a $20,000 account. We're talking on millions of dollars. So anyway, I meant to point that out before. Let me. And speaking of that, here's one of the stocks that contributed to your big return. This is one that you were in, right? VAPO.
Correct. Yeah, I actually did not. I didn't play this for as big of a move as I even should have in terms of my own rules. I'm trying to remember why. I think there was an earnings, so I took some. I think that gap.
I think it was right here. Yeah.
Yeah. I think I sold a decent chunk prior to the earnings. Obviously, that's a wrinkle you have to deal with. But if you look, this was textbook. You had VCP action, volume dried up, and then I think we even put this on breakout alert again.
We did.
Sort of formed another
right
cheat.
Over here.
Yeah, right
there. From that sheet, and it just came ripping out. I mean, look at this move. Look how efficient this move is. Remember, we were just talking about how these march to their own drummer. I mean, look at this. It just every day with almost no pullback at all from 26, 7-ish right up to 50. It doubles again. So it doubles first, breaks out here. It almost doubles here. Well, just about doubles here. Yeah, then right. It doubles again.
It's almost a power play within a power play. Right.
Yeah. Amazing. So another thing I think we should point out, Mark, and to everybody here, and this is why I have, for those of you that use MarketSmith, there's of course, there's my trend templates in there, as we talked about before, and we're going to go over those later in live trading with Arusha from MarketSmith. But there's various screens. There's a 5-month, there's a 1 to 4 month, there's a 1 month. The 1 month, the reason why we have a 1 month is because they will catch these what we call early turns. See, what happens is when you get one of these stocks that come from a period of dormancy, and that's where I really like them. I like them coming from a dormant period, and then all of a sudden they just explode, because that means something's really big has changed out of nowhere. So it wasn't expected. It's it's a big surprise when the stock's been dead for 3-4 years, and all of a sudden it doubles in 3 weeks. So what happens is those stocks move so fast that they don't give the moving averages a chance to turn up, and they might, go above. I wouldn't play one of these unless there was above the 200-day moving average, but it won't be above the 200-day moving average sometimes for months. Like on a confirmed stage 2 uptrend, now I want 4 or 5 months that it's above, and I want the 200-day in an uptrend, and you just won't get that. These will be, sometimes you do, but very often you don't. And when they come from this period of dormancy, they'll just come right above, just like this scenario right here. You got the 50-day. You see the 200-day is actually in a little bit of a downtrend, just starting to flatten out here as and you definitely wouldn't have this, all the confirmed stage 2 uptrend criteria. So they have that screen is in there. And I know David Ryan has said that he runs that screen all the time. He's been using that screen quite a bit. Let's see here. Let me show you another one. So most of these, we actually traded. Either I traded it, Mark traded it, or we both traded it, or in a lot of cases also David Ryan. He's not here today, of course. Right now. But I also like to, and I'll keep every now and then if I miss one. And usually if I miss them in real time, it's like I don't usually go back and start searching for these things and go back and say, let me go find a good looking power play. Usually it's a stock that I was watching and I knew it was a power play, and for whatever reason I didn't buy it, for whether I was bearish on the market, maybe I was getting my head kicked in on some previous trades, and progressive exposure, I was holding off. I don't know all the time exactly why, but but I can tell you this particular stock I remember pretty well that I did not trade it. I remember it was setting up and I was saying, this looks really good and I should be buying it here, but I'm going to pass. And sometimes they're thin too. They're real thin. Sometimes the spread is real wide, and I feel like I can't get a big position on without taking that spread risk. And I might just say, you know what, I don't care if, to have a small position right now. I want to get a big position on, and if it's got a big spread, I'll be at a loss right away, and I don't want to take that spread risk. So there's a number of reasons that I might not play that, but this is one that I did not, and it came right out. I mean, look at the efficiency. That's what I want you to look at. Look at the efficiency, how many days in a row this goes up, and it goes up 70% in 55 days. Another thing I want to mention here is that when the ones that work out, and Mark, I don't know if you have any any data on this, but what we have found is that the ones that work out, and usually, a good bulk of the move is in like the first 50 days or so. They can make much bigger moves over subsequent days, but that 50-day period, I like to try to, if you can. Now that's the sort of the sweet zone that I like to try to at least give them that 50 days or so. But when we look at them, we find that the ones that work out generally go up between 1% and 3% a day. When it's all, not every day, but when it's all said and done. So right here in 55 days, 70%, that's like 1.5% a day, right? So if you look at these, okay, over here, we got 170% in, that was actually in 14 weeks. That was a little bit longer, 170% in 14 weeks. We've got 143% in 9 months. So we'll find that these will go up, a good amount in a very short period of time. But the ones that work out 1% to 3% a day, the ones that really work out well, and that's that's a heck of a tear. So Mark, this is one that I know we were both in, and this was this was one that we bought for our clients, and had it as a recommendation on the in the Minervini platform, the MPA platform. This again, and like I said before, I want to point out that everything that we've said prior to this, nothing negates any of it. Everything builds on each other. I think of it as like I'm giving you like a Lego set. Everything snaps together. This all, and it's even more than that, because it not only is it all snapped together, it snaps together in a chronology. It goes from left to right until you get to that right side with the buy point. And now, of course, we haven't gotten into selling yet, but we're going to get into that. And that's the very right of the chart where the trade's over and you get out of it. But again, let's just look at this real quick, and then Mark, I'll let you comment on it. Look how tight, first of all. I mean, holy cow, this was really, really tight. And then it just comes ripping out for 2 days. See the natural reaction? Well, a couple days and boom, new high ground, right? Look, natural reaction, boom, new high ground. Now, remember, I said after you have a couple of natural reactions, you might start undercutting some previous lows. You get a little bit of volatility. It gets a little more volatile. Now, boom, comes right back. So now you've got a nice move here. I mean, this stock went, again, where's it? Breaks out at around $8 and goes to 16. There it is, a double in a very short period of time, in just, 8 weeks or so. So I can't remember how you played this, but I think you held this for a little while, didn't you?
Yeah, same rules. I think this one, in 2 days, you had a 20+% gain.
Yeah.
So I peeled a piece off, and then I held some for a minimum of 20 days. And so that's normally how I'll do it. If I can finance the hold. One other thing to add about this stock, to your point earlier, if you look, I think this rallied from just over $1 to almost 9.5. If this thing had gone up, 400 or 500% before finally, and didn't barely give anything back, the stock telling you that is so rare.
Very efficient, very efficient.
Yeah, and then once it tightens up, it's just it's just telling you there's no supply coming. There's no profit taking, like you said. No. If somebody wants to buy more of this stock, they're going to pay up. And you see, one above average volume day, and it took it up 10+%, and followed by another one. So yeah, this was kind of classic. And this is sort of the only way I would play a lower price stock these days. With this, I don't usually like them under $10 anymore. But when they set up like this, man, like wild horses aren't going to keep me from taking stab.
Yeah, it was just too good. And this is one that that again, this was actually this price, right? I think this was the actual price.
This is the actual price, yeah.
Yeah. It really was a $9 stock when we were buying, or an $8 stock. So again, this is one of the few that we bought at a lower price. Now I want to also call your attention and take a look at the contrast between this side here, okay, this action. First of all, look at this, right? And after this giant move that goes from like $1, this is a tenfold move. Just think about this. The stock goes up tenfold and doesn't correct at all. I mean, it's almost zero correction. Look how tight it goes. That is telling you that this stock, again, as Mark just said, it was just too good. It was so powerful. It was incredible. It just was almost a guarantee that this was going to at least break out and make at least a trade. So look at this here, how efficient from $1 to $16, a 15-fold move. Now look at the action over here. Look at it's all over the place. Look at all the volatility. See, now it's under distribution. You see, now you've got it's sold off here. You can see the volume came in here, and it's all over the place. It's erratic. This is a perfect example of supply not coming to market on this left side and lots of supply coming to market on this right side. Why is this supply coming to market on this right side? Well, because it just made a 15-fold move. You see, now that doesn't mean it can't go higher. We're not going to sell a stock just because it makes a 15-fold move. We're going to sell it when it starts hitting sell rules. But the fact is that you have a lot of pent up profits here. And now when the news, whatever changes, and you're not going to see that news probably, institutions will be selling in anticipation of that because, they're calling vendors and doing channel checks, and the stock usually will sell off before the news is even evident, or it might be on a surprise earnings report. Then everybody starts running for the exits all at once. And now you've got all this supply. You can just see it's all over the place. And this is where you want to avoid the stock. This is not where you want to be involved. So real good contrast there. I actually I should have moved over here because that was a more close up. But you can see super, super tight. Now, here's a good thing I want to talk about what Mark just said. And Mark, you said that this is one that you sort of gave that, you gave it that 20 days. So in 26 days, it went up 81%. So just giving it that simple rule of just, okay, let's just give it 20 days. If it doesn't stop me out, let me give it just, 4 weeks and let it do its thing, 80% gain in a short period of time. Let's see here. Another one. So this one here, and again, I want to call your attention to a few things. How tight the price action is when it comes out and the efficiency. Look at the efficiency. 1, 2, 3, 4, 5, 6 days up in a row, right? Of course, this is a total blow off with this big giant move, but it goes from 25-ish to $62 in just 6 or 7 days. Again, an incredible velocity. This is why we call them velocity plays. So here it is zoomed up a little bit. Now, what happened in this particular scenario, and I don't know if you remember this. I'm sure you do because you traded this one, right, Mark?
Yep.
So I saw this right here on this sheet, and I did not play it. And then, boom, it came out, and I was like, oh, no, I made a mistake. I should have bought this one. And this just came out. It was just so perfect. I can't remember why I didn't buy it, but I didn't buy it. I just took a pitch and watched. It had such a good breakout, and I was like, oh, no, this is just going to go, and I'm going to have to watch this thing now. I was ready to take it off my screen. And then a few days, went by, and it started tightening up. So I said, okay, I'll watch this. We put it on buy alert and started watching it. And then it just tightened up quite nicely, had those last few days, and it set up your cheat area, but then it just set up the cup with handle. And it was a perfect little cup with handle. Again, look at the breakout. Just bang, 150% in 6 days. 1, 2, 3, 4, 5, 6 days up, all the volume. Look at all the volume coming in. Look at the 1-2 punch. You see how it comes way down, and then look at the contrast. You see, and I don't want you to look, this isn't like this magical thing that we've got to see the volume, because this is after the fact. You're going to be buying this stock as it's breaking out, okay? So you're not going to necessarily see that volume. I mean, you might extrapolate it in the morning and see that by 10:30, oh, this volume's running really high and it's running well above average. That's fine. That's the way you would want to calculate the volume intraday. But what I want you to look at is the supply not coming to market, and then the explosion of how the supply demand dynamics the footprints of supply and demand. This is what I want you to understand and fully grasp, because once you understand this, you not only do you start really looking and seeing the chart in a different way and understand, what's happening. You want to understand what's happening. These aren't just lines. There's some real information there, and there's some real intelligence there. So I want you to understand that. And by understanding that and then utilizing it properly, you're going to have a tremendous amount of confidence. People always ask, how do you take the big position sizes, and how do you, trade with the size or trade on margin? Well, you've got to know what you're doing, know what you're seeing, know what to expect, know how you're going to respond. And you have to have that confidence. You have to have the confidence in your system and the confidence in your ability to execute that system. And that comes from knowing 100% that I know what I'm seeing here. I know what it means. And I know this is green light. And just the opposite. I know what I'm seeing. This is a red light. And it doesn't matter if I sell and it turns back up, it's a red light right now. Risk has to be managed in real time. Breakouts have to be bought in real time. If you buy the breakout and then it fails, well, you didn't know it was going to fail. You have to buy the breakout. All you can do is handle in real time. So you have to know what you're seeing and know how to respond and have the confidence to do that. So this one here, this edit, I remember this one really well. I can't remember if you got involved with this or not with me, but it went up again. Look at the move. See, it's dead, completely dead. And then just whammo. Look at the explosion. 1, 2, 3, 4, 5, 6 days in a row up after it was a little, maybe another day there, but about 6 days up. It goes from, what are we looking at? About $30 or so up to over 60. So it doubles. And now look at how it just doesn't correct at all. It goes so tight. This was 1, 2, 3, 4, 5, 6, 7. This is like 8 days. It looks like on the 9th day it came out. So this was really early. And what happens sometimes when they come out early like this, they're flash in the pans, and because they come out prematurely, and sometimes retail buying will jump into these names if the market has been going for a while. But bottom line is that look at the trade you got in one day. I forget what I made on this, but I think it was something like 25 or 30% just in that one day. And it went up from, what are we looking at? About 65-ish or so, 65 up to 96 in just one trading day. Again, incredible velocity. This one was added to our buy alert list, BEEM, but I actually didn't trade it, and I had to just sit there and watch it and kick myself every dollar up here, or every day up. Again, 1, 2, 3, 4, 5, 6, 7, 8. Looks like 9 or 10 on like 13 days up. Just an incredible explosion. We're going to show you a couple more examples here. ACIA came out here, and then you see a big gap right after. Sometimes they'll break out, and then you'll have an earnings will come out. And if I can get at a cushion and get up a little bit on it, I'll go into that earnings report. Sometimes this just comes out of nowhere, and this is the stock breaks out and it's going into, all of a sudden, some news comes out. They get, a drug approval, and the stock was discounting that. Again, look at the efficiency of this move. Look at all these days up with almost no volatility. You see how this stock, nothing's affecting this stock. Because I can assure you one thing. The Dow and the S&P and the NASDAQ did not look like this. not even close. So this is really, again, a stock that's really marched into its own rubber. 85% in just 20 days. Again, there's that 20 days that Mark is talking about. If you just gave it the 20 days, you're up almost 100% in this one name. Let me show you something else too. These can also manifest themselves as with cheat areas and handles, or low cheats and cheats and handles, or all the above, or one of the above, or none of the above. So again, we've got the cheat right here. Volume comes down, breakout. If you had to stop, you probably would have held it because it didn't even get below break even. And then look how tight you go for those 2 days. I mean, that is about as tight as you can get. And then you start coming out here. You could have started buying here, and certainly, adding here, and then that's where the excitement comes. 1, 2, 3, 4, 5, 6, 7, 8 out of 9 days up. 96% in 14 days. Again, if you just gave it that 20 days, you would be able to get a really nice gain there. Now, another thing that can happen a lot of times is you'll get, I shouldn't say a lot of times, but it happens on occasion. You'll get an IPO base, and the IPO base is completely buyable, and you might either buy it or maybe you don't. But it actually morphs into a power play. It goes from an IPO to a power play, and I love those. I love that setup. I love power plays that have been recent new IPOs. I love when I'm getting on a stock that's fairly new. So this is a perfect example. You get a nice, perfect primary base here, big breakout, and then it just sets up again. It tightens up right here, breaks out again, and now this is actually turned into a power play. And here again, look how the real acceleration happens once you get that power play. And again, 1, 2, 3, 4, 5, 6, 7, 8, looks like 9 out of 10 days up. Just totally efficient, or I should say inefficient, inefficiently priced, but an efficient price move. Here's another one, similar, Adeptus. I think that's how you pronounce it. Primary base. Right? Primary base comes out of the primary base and then morphs itself into a power play. Again, and I talked about 50 days, right? So 77% in 50 days. So again, I think, the general rule of thumb, going by what Mark and I have both, have anecdotal evidence, and I have a lot of scientific evidence going back for, decades on this, is that 20 to 50 days is really important to try to make it through, that minimum of 20 days. And then try to get to that 50 days, maybe even with a partial position. And then from there, if you want to play for even a bigger move, that's fine. But you should be looking to backstop and really start nailing down profits into strength and so forth. Let's see here. GENT. Is this one that you were involved in, or do you remember?
This was an early sell. I remember. I graded. This is, I'm trying to remember what year this was. This might have been 2015 or somewhere in there. But yeah, this was another one I graded, saying, why in the world did I take profits at 12% or something like that when it was doing nothing? I didn't give it to 20 days, or at least require a little more. The other point I would make, Mark, too, is, when you're saying, giving them that time, once they get really extended, like that BVXV, or almost parabolic, that's where, that other example where it went up 40, 50% in one day. Right. That's where I'm peeling off a piece of the position, because, you're trying to smoothen out your equity curve and at least use that strength to lighten up.
Sure. And with this one here, with this GENT, I think we talk about this when we talk about in post analysis. So I don't want to steal the thunder of that particular section, but this is one that I believe this is the one that I sold at a 20% profit and just kicked it out. And it was only in 7 or 8 days. I was buying it off this little cheat right here, and then it tightened up, and you got another little breakout, and you actually got 2 more little buy points that you could have bought from, all coming out of this base. Another thing I just want to make sure that, I know I pointed it out before, but I want to reiterate it, is that we're never buying up out of the base. We're not pyramiding up. Once it gets away from the base, we're leaving it alone. So we can have multiple buys, whether it's a large base, a power play, an IPO base, doesn't matter. As long as it's in the base and you're coming from the cheat, the low cheat, the handle, a pullback to the breakout, those are all buyable areas. Whether there's one of them you buy or if you pyramid yourself up, those are all buyable areas. Once it gets away and it gets extended, now you leave it alone. But again, take a look at the efficiency of the move. You come out of here and you see how it's just all alpha. It's just all alpha. There's so little volatility. This stock never even gets below the 20-day moving average. This is the 20-day. The 50-day is way down here. It just holds the 20-day the whole time. And again, if you look up here, 200% in 90 days. If you were to take 200 and divide it by 90, it's about 2.2. So again, 2.2% per day. That's sort of, the ones that work out. That's what we see. They're between 1 and 3%.